So many of us have been hearing about bonds. Today I'm going to be explaining it to you, and I will title it Understanding Bonds 101. Now, bonds are like loans, okay? You give to companies or government, they borrow money and promise to pay you back, okay? With interest, So the interest is actually your profit. Now, how bonds works? Number one, you lend money to the issuer, which is company or government, okay? Then number two, they pay you interest called coupon, okay, periodically. And then number three, at maturity, they return your principal to you, okay, the interest, your money and your interest to you. Now we have type of bonds, and number one here is government bonds, generally saver, okay, issued by governments. Then number two is corporate bond, issued by companies, often higher risk. It has higher risk actually. Number three is municipal bonds, issued by local governments, okay? Now this is actually an example that fits in. You buy a 1 million naira bond with 10% annual interest. Now you will get 100,000 naira interest yearly and 1 million naira back at maturity. That's actually your principal. Okay, now these are actually the pros to know. Number one is returns might be lower than stocks. Number two is interest rates changes can affect bond price. Okay, that's actually one of the pros you need to know. Then the cons you need to know: number one, returns might be lower than stocks. Okay, number two, interest rate changes can affect bond prices. That's actually what it is. And I believe you've gotten so much value from understanding bonds 101 with the Entrepreneur Maestro Ghana Crown. If you got value, like this video, follow this page, and share this video for others to learn on understanding bonds 101. We are going to be talking on understanding stocks. You actually need to understand stocks. You'll be hearing stocks, but you actually don't know what it is in the financial world. Now I'm just going to break it down for you. This is stock 101. Let's ride on. Okay, now stocks is also called shares or equities. It represents ownership in companies. Okay, when you buy stocks, you become a part owner of that company. I believe you understand that now. Now this is it, how stocks works. Okay, how stocks works: companies issue stocks to raise money for growth or operations. And number two, how stocks works: you buy stocks hoping the company will grow and the stock price will rise. Okay, and then number three is how stocks works: earn money via dividends. Okay, earn money via dividends if the company pays them, or by selling stocks at a higher price. Now these are actually the types of stocks. Number one is common stocks. Most common type gives voting rights. Preferred stocks, we have number two, preferred stocks, priority in dividends, but usually no voting right. Okay, now this is actually a very quick example on on this. If you buy 100 shares of a company at 500 naira each, you invest 50,000 naira. If the price rises to 600 naira, your investment is now worth 60,000 naira. I believe you get that right? So you can sell and make a 10,000 naira profit, minus the fees, minus the tax and all that. Okay, now these are actually the risk. Number one is market volatility. Okay, market volatility, where the prices can swing widely. Okay, the prices can swing widely. And number two, risk is actually company performance. If the company does poorly, stock price might drop. Okay, that is actually what it is. So I believe you actually got value from this video on stock 101 from the Entrepreneur Maestro Ghana Crown. Okay, so if you got value, like this video as well. Do well to share for others to learn, and comment your thoughts on this. I will see you on the next one. You can click the link on my bio and join the Wealthify Mastery group. There I can show you a system that has been working for me that can enable you to earn supplementary income. Okay, this is Ghana Crown. I will see you on the next one. Cheers.